Well, the Consumer Price Index report for July was released today, and it shows what analysts call a better than expected slowdown for rising prices. Our friend Mike Giordano, financial advisor with Williams Wealth Management, is here to help us make sense of all of this. Okay, so Mike, the inflation shows, or the index shows that inflation cooled down a little bit. What does this mean if we're looking to borrow money to, do big stuff, buy a house or a car?
Right. So inflation came down a little bit. It's kind of like, we were in the 90s in weather, and now we're in the 80s. So it's cooler, but it doesn't necessarily mean it's cool yet, right? That's kind of the same thing with inflation. So everything's pegging off of this inflation, and whether the Federal Reserve decides how much they decide to continue hiking rates, it's all going to peg off of what inflation does. So this is just one number. It's a good number. In order for you to have a trend, you got to have a good number. So we have this good number. If it continues, then it might mean the Fed doesn't have to hike rates as much. That means mortgage rates might not have to rise as much. Same thing with car loans. Same thing with credit cards.
Okay, so that leads very nicely to the next question. How could this drop in inflation affect the financial markets?
Exactly. Same exact factor. Inflation coming in keeps interest rates low, and if interest rates can move lower, then stocks, they get excited and then go higher. You saw that today. The stock market's been up. It's actually been up over the last month and a half because as you've seen oil prices go down, that was kind of telegraphing that inflation would be coming in at least a little bit. And so far it's good for the stocks, but we'll have to see as it plays out.
Okay, so encouraging news. The markets liked it. So big picture, could we be coming out of the woods yet?
That's what everybody wants to know. Everybody, patience is not a thing that any of us have.
No.
So we all kind of want to, let's go, hey, forget about traveling. Let's just get to our destination. So it's like, if we're going to have this recession, let's just get to the recession and get beyond it. We need to kind of see more data. So this was a very encouraging sign today. It was excellent. The markets cheered it. They've been cheering it, like I said. But we need to see, inflation consistently going down here over the next few months. That will allow the Federal Reserve to back off, maybe not hike rates as much, and then the markets can kind of move forward.
All right. Well, we know you will be watching and coming in to keep us updated.
You bet.
Appreciate it. Mike, thank you so much.